That's fine, except it just needs to be turned around a bit.
Okay.
Because I'm right in the middle. And you need
Just you are using the full screen mode to back and listen to person. Okay. Is it showing live now? Let me see whether it is live. Okay. It's showing the
next. Press next.
okay. Okay, now it's okay.
Yeah. You just have to turn it around a little bit because I'm right in the middle. Yeah, so you.
Yeah.
That's it. Yeah, that's it.
Okay. Yeah. Make the full.
Hit camera button. Blue one. You're starting our video, Saisd.
Oh yeah.
Yeah. So they're both working.
Okay.
Again, that should be turned around a little bit. Just towards you a bit, yeah, just a little bit because you won't be in it much. Keep a little bit more. Because that's it, that's enough actually. Yeah, wouldn't want to do any more because the other phone gets in the top corner.
Huh?
The other phone's in the just leave. There's nothing you can do about it. It's not that bad.
Coming live.
Yeah, and
Just check how it is live in the YouTube. Hello all, good afternoon. We're getting live from Adelaide, Australia. 7th of July, we had a program on GPI, how we are going to calculate about the project that calculating GPI for whole of South Asia. So Phil Lon gave a speech, and we have our speech is recorded in the YouTube, our channel Saisd, a think tank, a channel. Even in the Facebook, there is the same name, Saisd, a think tank, a Facebook page. So you can see those videos over there. I hope I tried to send lots of emails to everybody. Hope you all got that and got a chance to see. Otherwise, you can still see as we speak and all that. And if you go to our website, then in the website there will be a panel, side panel. There will be something called a report on South Australia GPI, an example. So you can click, and there is a like a case study, a small report is there, so you can understand how our actual project on South Asia will be. And today we'll be talking more theoretical on the GPI, more clarification and all that. And if you want to give any information, please text me at WhatsApp me or email me at if you go to our website, my email ID is there, kuntal@saisd.org.in, or you can text me or WhatsApp me at +61 401 646872. Generally, my email number is there in the website at the talent pool, that area, and also given in the emails and the brochure also. So if you have any issue, just text me, and I'm checking with my laptop and my mobile, all the text and all that. Associate Professor Phil Long, thanks for coming today. This is our second day session, and there will be another final session 28th at UniSA Mawson Lake campus. So, Professor, tell me that about a little bit on the project, what you have thought about it.
Okay, so the aim of the project is to calculate the GPI, which is called a genuine progress indicator, which is an alternative to GDP, gross domestic product, as a measure of sustainable economic welfare for each of the South Asian countries. The genuine progress indicator has only been calculated for about 20-25 countries worldwide. Most of those are European, North American countries, Australia, so forth. There hasn't been a GPI study done of South Asian countries, and this would be a revolutionary project in the sense not only that it would be calculating a GPI for South Asian countries, but would be a GPI study of an entire region. So the aims of the project are to calculate the GPI. Now the genuine progress indicator, we'll talk about it soon, is made up of a lot of different items, which provides a lot of information for policymakers and also for researchers generally. The aim of our aim is to show what has actually occurred in the South Asian region, which is not properly revealed by a measure of GDP, gross domestic product. Having done that, all the GPIs for all the South Asian countries, the aim is to write a small report. So there'll be a regional section and then a section for each South Asian countries, for each country. Then it's hoped that some academic papers, journal articles will emerge from the study and a book. So we're hoping to produce a book that would be published by an Indian publisher, which would make it more accessible and more affordable to the South Asian region. The other aim is to perhaps for me to do a speaking tour at the end of this year, so I could talk about and explain the GPI results to a general audience, so not just an academic audience, but also interested lay people and bureaucrats, politicians, anyone who's and journalists, anyone who's particularly interested in the study, because I'm expecting it will be a study that will provide quite interesting and new information about genuine progress in the South Asia region, which should help policymakers, firstly, to understand the effects of past and present policies, and also how future policies and institutions can be designed to better improve the sustainable economic welfare of South Asian countries.
Okay.
So just talking about the report. So there would be a very, very sort of brief, almost like an abstract, which would be, we hope to make available free of charge, but the full report would be made available at a very nominal charge, which would make it very accessible to all people. Also, we're hoping that the data that I'm able to generate will be available for researchers to use.
So, what sort of researcher will be benefited? Is it only the economic students?
No, not necessarily. No, not economic students necessarily, because it covers not only economic benefits and costs, but social benefits and costs and environmental benefits and costs. So it'll assist researchers from all different academic backgrounds.
Mm-hmm. So, this is the formula you have written about.
Okay.
This is the formula we have written just for viewers. So this is the top one is the GDP formula and the GPI formula at the bottom. I have
That's back the front. Is there a reason for that?
Huh?
That's back the front on the screen.
No, we have.
It's just the way it looks. It's not how. Well, we could turn it around. It's just because no. We could almost see it through the paper. All right. I don't know. So it's back to front here. It's not what I normally look like. So the GDP is your standard measure of sort of national well-being, and it's equal to there's five main items. One of them is consumption expenditure. That's C. The other is private investment expenditure, I. Then there's government spending, plus X stands for exports, and you subtract imports. The problem with GDP is just a measure of what a nation produces. It doesn't indicate whether that production and the associated consumption is beneficial or costly. The GPI starts with just one of the items that make up the GDP, and that's seed. So it starts with consumption benefits, then adds a series of economic benefits, such as unpaid household labour, which is not covered, not included in the measure of GDP. Also, the benefits from publicly provided infrastructure, and the benefits from a better or more equitable distribution of income, meaning that if the distribution of income, the gap between rich and poor widens, so it deteriorates, it would have a downward effect on economic benefits. Then there's a series of social costs which are subtracted. We're talking here about the cost of unemployment, the cost of crime, for example, and then finally a series of environmental costs, which again are not taken into account by GDP, that are subtracted. So those environmental costs include the cost of non-renewable resource depletion, cost of air pollution, water pollution, forest loss, soil erosion, and CO2 emissions, the cost of CO2 emissions. Now, once the various items are subtracted from the initial base item, which is C for consumption, then you get your overall GPI, which can then be divided by the nation's population to work out the GPI on a per capita basis. And that can be compared with the per capita GDP. And it will give a more accurate indicator of the well-being, or the genuine progress, or you might call it the sustainable economic welfare, being enjoyed by South Asian countries, not only at the end of the study period, but what's happened to genuine progress throughout the period. The aim is to calculate the GPI for each South Asian country from the period 1970 to 2016. I'm using World Bank data, IMF data, and data from a few other sources. So I've got a consistent database, and that I find can take me back to about 1970 for each country. So by using a consistent database and using the same approach to calculate each of the items, it makes it easier and more transferable to make comparisons between the 8 South Asian countries. So there will be a regional GPI, there will be one for each nation, and so we can compare the GPI between nations and also where a nation compares with the overall regional GPI.
So I have spoken a little bit on the GDP and GPI and all that. So can you go step by step and tell us that what is the basic source of information from where a person, if someone wants to calculate GPI, what is the first step from where they will get the data?
Well, you can get the data from the National Statistical Agency, but because the data is somewhat inconsistent from one national agency to another, that's why I'm planning to use the World Bank data set, because it's consistent data. You need to use consistent data. You don't need it if you're just doing a group of countries within a region, then you must have a consistent data set. And that data set is quite a comprehensive data set. There are a few problems with gaps in the data, but that can be ironed out. But the data is well known. It's considered to be acceptable data set for research in this type of area. So we're not talking about a data set which has enormous weaknesses, a data set that is widely recognised as a very, very accomplished data set. So
first step is to get some data from the national or the...
Well, I've got the data from a lot of the World Bank data does come directly from the National Statistical Agency. So I've got World Bank data, IMF data, I've got all the data I need to calculate all the items that make up the GDP.
What about you, anyone who now want to calculate, we are doing it at a national level. So if someone want to do it at a regional level, like we have done South Australia here, so someone can do a particular state,
yes,
in Tamil Nadu or Kerala or
Yeah.
Jammu Kashmir, anywhere. So if they want to do it, so they get the data. Now next step, what is the thing?
Well, they have to get the data from the National Statistical Agency.
Okay.
The World Bank doesn't need
And what data they need, definitely?
Sorry?
What's set of data they need? Means consumption data?
Well, I guess it's a little bit difficult to go through all the data that's required. Our aim is to, of course, is to produce an instruction manual. So and with all the relevant data, so that people now, even though it will be done at a national level, people will be able to see what data has been used for a particular item, and therefore will be able to go to their own nation's statistical agency to find the comparable data at the regional or state level.
No, my point is that for GDP you need C plus I plus G plus X minus M. So you have export, import data, and consumption, investment, government investment, and
Government spending.
Spending. Those sort of information is required. But for GPI to start with, you have to start with consumption data.
Well, that comes straight from the national.
Yeah, that's fine. The next step, another data set like economic benefit. How you get that?
A lot of statistical agencies will have data on the amount or quantity of hours worked in the household. You multiply that by the number of households. You in the end, you come up with the number of unpaid household labour hours across the country, so and you multiply that by.
How do you get that? How do you?
Well, in some cases you can get that directly from the National Statistical Agency. In other instances, you have to use other forms of data to construct an index for household labour, which you then multiply by.
Can you give some example of how they will do?
Oh, look, it's difficult without actually having the data in front of me. In the end, what method you use will depend.
Okay, for example, in South Australia you have done, and that is the public information through our website.
Yes.
It is in the side panel of our website, and you can see that. And if you go down to the appendix, and there is a is there, and then there are lots of data. So, for example, the economic benefit for South Australia, you calculated it like cost of unemployed.
Well, that's the social cost. The economic benefit of the sun, all those.
Okay, voluntary labour. Okay, so in Australia, how you got that?
Well, if you could just perhaps just scroll right down, because there's a spreadsheet. For each item has its own spreadsheet. So if you went down to keep going, because it's quite a few spreadsheets. Right down to so if you want say household labour. Keep going. No, well down.
Okay.
What are we up to now? District well down. It's well down. It's probably about halfway.
Okay.
Okay. What have we got? Okay. Okay. Yeah. So these are so that's just consumption. Okay. What have you got now? Distribution, slowly. Infrastructural services. So private sector, public sector, government business enterprises, which you can get cases from the national accounts. Now what's this one here? That's it. Yeah, that's household labour. So it started with the annual hours of.
So if someone wants to say it is page 39, so this is the value of unpaid
household labour for Australia, South Australia, and rest of Australia.
Yeah.
So the data exists. Now this is why it can be somewhat difficult at the state or provincial level. The data exists at the national level. So you can see I've got a column there for Australia.
Yeah.
The annual hours of household labour per household. Then I multiply that by the number of households to get the average. We'll get the total number of household labour hours. For South Australia, that's done. The use of survey information that is done at the state level to obtain information about how people use their time.
Okay. And suppose in South Asian context, suppose the government don't keep that information, even at the national
level. That becomes
level.
very difficult. Becomes very difficult. It perhaps could be done. You'd have to do a method. So if you don't have the data that's required to calculate the value of an item in the conventional sense, then you have to devise an alternative method with the data you've got the thing is, the poorer the data, obviously the cruder the method and the less accurate is the value for the item.
Definitely, yeah. Okay, so that's...
But in general, as long as you've got pretty good data, you get quite reasonably accurate values.
Okay, if you scroll up, then this is one example, because the voluntary labor data is very difficult to assess.
It's okay at the national level, or country like Australia, it's not easy to get it at the state level.
Okay, and then something like that.
So there's a lot of social costs.
No, we'll go to the economics only also a little bit. Let's start spend some time. Infrastructure service in general. So
general government.
Yeah, general government.
So there's three forms of infrastructure spending. There's infrastructure spending by the private sector.
Yeah.
By infrastructure, we're talking about roads, highways.
Yeah. So basically,
bridges,
this information is
schools.
relatively easy to get.
It's not incredibly easy, but it's generally pretty good.
Yeah, generally, as a good statistical institute will give that information.
Yeah. So the private sector undertakes spending on infrastructure, provides infrastructure. Then there's a general government, and also public corporation. And public corporations can be, rather than directly by government, they can be organisations or corporations owned by government that also provides public infrastructure.
Yeah.
And then you can derive value from the infrastructure that exists at a particular. The imputed value for beneficial aspect of roads, bridges, of schools, hospitals, museums, all sorts of basic forms of infrastructure, which of course is not picked up in the consumption item.
Okay, for the audience, so in economic benefit, something like welfare contribution of private consumption, expenditure on consumer durables, services from existing consumer durables, contribution of private consumption, distribution index, weightage, welfare contribution of private consumption, welfare contribution of government consumption, welfare contribution of all consumption.
So that's government plus, so that's just...
And then infrastructure service, private sector, public corporation, general government, infrastructure total.
Yes.
Then household labor and voluntary labor, unpaid labor.
So that's that unpaid is the sum of the two.
Okay.
And they're the main economic benefits.
And household labor is also very difficult to...
Well, that's what we saw before. So it depends. At the national level, it's not too difficult.
Even the unpaid and all.
Yes. In fact, I have to say also, this GPI study doesn't include something that will be included in the South Asian project, and that is I've found data on the size of the shadow economy of different countries. Now, the shadow economy is, of course, the informal part of the economy that's not captured by the national accounts. So that's work that and exchange of goods and services that occurs outside the standard marketplace.
So one thing, also since you talked about shadow economy, is it shadow economy means black market?
Well, you could call it, but it's
because in India, especially, there's a big on.
Okay, so
there was a demonetization.
I don't know say whether it includes illegal activity, but it includes activity that is legal, but it's just not paid for, bought and sold by with the use of money. So someone simply, or if it is, then it's not declared for tax purposes.
Yes, exactly. That's the main thing. And obviously,
the national accounts doesn't.
So we don't think there is a enough amount of barter system going on even in a developing country like India and South Asian countries. But
there is some of it.
But there is a huge volume of where the tax is not paid, and that's why they definitely there. So government trying a lot.
Yes, and that varies a lot between countries.
Yes.
So I think for the USA, it's only about 8% of GDP.
Yes.
Is equivalent to GDP. Is part of the what you might call the shadow economy. Whereas with some countries it can be as high as 40%. Now when I say 40%, I'm not saying 40% of GDP. So if GDP is a certain value, 40% again
Plus.
of that, can
So
be added.
140.
Yeah, so 140%
Okay.
is a better indicator of some of the level of economic activity.
Okay. And then okay, still then this economic benefit more variable sort of, okay. So
Yes.
you can quantify and all that, but the challenge is the social cost. Now the social cost includes cost of unemployment and underemployment, cost of crime, cost of family breakdown, share of change in non-federal government foreign debt, etc. Something like that.
Okay.
So these are very intangible. How do you get that?
The cost of unemployment is not too difficult because again, the National Statistical Agency reveals data, generates data on the unemployment rate and the number of unemployed people. And I've used
I don't think in Indian context data.
Well, you can only do the best with what you've got.
Okay.
But once, and then you can use studies done by, because the cost of unemployment is not the lost output as a consequence. Because if there is lost output, it will be reflected in a reduction in the economic benefits. The cost is that it's been shown there is a significant psychological cost associated with unemployment because you're alienated from society, affects people's self-esteem. They don't feel as though they're a part or making a contribution towards the social surplus, and that can lead to things like mental illness and so forth. So the number of unemployed people, there's a value that's imputed by multiplying the number of unemployed people by the average cost of unemployed person. The cost of crime, the cost of crime is based on various crime statistics. Again, you assume a particular cost for individual crimes, multiply the number of crimes by the assumed value for each crime. For the South Asian GPI study, there won't be a cost of family breakdown. That's very difficult to get that data. That's only calculated for some countries, even for quite wealthy countries. The data is lacking, so that's not always calculated. It's only a small item, so not including it in the GPI for South Asian countries won't have too much of an impact on the GPI.
Okay, so in a country, in a developing country like that, how easily do you think we can get those?
Well, I've got the data.
You've got the
So I've got all the data that's required to calculate all these items for the South Asian countries.
Yeah, and then now comes the
except for things like cost of family breakdown.
Yeah. It's very different.
But I'm including an item that's not included there, and that's the shadow economy, which is a very important one. And from my memory, my knowledge, that's the shadow economy has never been included in the GPI study. So this will be a somewhat new and innovative study. I'm also weighting the welfare effect of private consumption expenditure using the Gini coefficient, but this is a new approach, so it is a unique approach that I think needs to be undertaken. So it'll be the first of its type. Okay,
and then more intangible is the environmental cost,
yes.
Like that includes
non-renewable
resource depletion, land degradation, excessive water use, timber depletion, air pollution, urban wastewater, long-term ecological damage, loss of natural capital.
Really, that loss of natural capital is just the sum of all the environmental costs.
And ecological health index.
Yes, I won't be doing that for the South Asian. I've seen that done, and I've only done that's because I've done it for Australia and some Australian states. So I think that's something that should be done. Although what I plan to do for where it's got timber depletion, I'm going to look for, and include not just the loss of timber when forests are depleted, but also the loss of ecosystem values, which will take into account many of the things that are covered by the Ecosystem Health Index. And that will be possible to do that.
So is it, even in a developing country like in South Asia, they have started keeping this information in the...
You can use information to derive an index for each of these physical index, which you then multiply by assumed cost value.
Yeah, because these are pretty much new things.
Yeah.
Relatively not traditional economics
No, they're
asks
not.
for that. These are externalities, basically
Yeah.
externalities, and
Yes.
in economics, externalities we just say, okay, these are
Yeah.
externalities.
So we're talking about
So
an
how
indicator.
do you think we can get this information?
Well, I've got the information. I've got it.
For how long? Still.
For the 1970 to 2016 period.
Oh.
There might be some gaps, but
Okay.
you can use various techniques to fill in the gaps.
Okay.
But the information is there to calculate these items.
Okay. The people who calculated, you got the information. Now, just I'm asking, for example, excessive water use, how they calculated it.
I'm not entirely sure.
But
But given it's World Bank data that I'm using, what we can assume that those that have come up with the data have used fairly rigorous sort of techniques.
Okay.
I can't go and investigate all the methods that are used.
Mainly asking because many people who are not from economic background, they will not be knowing. They will say that how they got it is so intangible.
And in many cases, the World Bank is just collecting data made available by national statistical agencies. And there's a sort of standard approach that is used to calculate physical aspects related to the environment. That's common to all countries in the world.
Okay, so based on that, so you have consumption, economic benefit minus social cost and environmental cost, so we get the GPI.
Yes.
So still, is it this GPI, or is the net GPI or the gross GPI?
No, it's net. So it's a net measure.
It is
So
net,
because
because you're deducting.
you're adding benefits and you're subtracting costs.
Yeah.
Which is why it's a superior indicator to GDP. GDP just counts everything as a benefit.
Yeah, so it's a
So if
gross.
you
That's why
guarantee-
it's calling gross. It's not.
No, that's right.
Yeah. That's
Well, it's not just that it's called domestic products, a poor measure of economic welfare, because the problem with GDP or even net domestic product is, as I said, it counts all economic activity as beneficial. So if, for example, economic activity is undertaken to undo environmental damage, that's counted as a benefit. When in actual fact it's a cost, cost of that arises because of the environmental damage. So these are resources that are being used just to restore the environment, hopefully, to its previous condition that cannot be used for some other beneficial purpose. So they're in fact opportunity costs. Now GDP counts that as a benefit, the GPI counts it as a cost, and therefore it's subtracted, as all costs should be. So
basically this will be getting more net progress.
It's a net measure.
Net progress.
Benefits
and then
less
you
costs.
divide it by population, you get
You get well, you need it per capita, because India's obviously going to have a very high GPI because it's got a very high population. So by dividing it by the population, then you're able to compare GPI on a per capita basis, and that's of course far more realistic and useful measure than just the raw measure at the aggregate level.
And now there is other questions like there are, other than GPI, there are other things like Living Planet Index, Ecological Footprint, Human Development Index, Environmental Performance Index, then Green Growth Index. So when you compare these alternatives, why people will go for GPI?
Well, can I just say something about the adjusted net savings? Is just a very, very simple adjustment to investment spending. So there are very, very few adjustments. And it makes the assumption that benefits and costs are substitutable, and there's a lot of people who have great problems with that sort of approach. The Living Planet Index is more of an environmental index. So it's not so much an economic index. It's not counting the benefits and subtracting costs. It's just more of an ecological indicator. So it gives you perhaps a better indication as to what is happening from an ecological sustainability perspective. The ecological footprint, I think, is the best of all the ecological indicators. Again, it's just an ecological indicator, so it gives you some idea as to whether or not a country or the Earth as a whole is, people as human beings as a whole, are operating sustainably, because ecological footprint compared with biocapacity, and if ecological footprint exceeds biocapacity, it implies that economic activity is unsustainable. But The ecological footprint is an ecological indicator. It doesn't function and is not meant to serve as the same or a similar index to the GPI. Human Development Index is a very weak indicator in my opinion. It just takes into account about 3 or 4 items, one of which is GDP. So the very thing that it's trying to correct is in fact that makes up the Human Development Index. That's not the case with the GPI. The GPI only starts with one of the components of GDP, which we know is a benefit, and that's consumption, as the base item for the GPI.
But Human Development Index is quite famous.
It is well known, but that's simply because, in my opinion, there haven't been sufficient and adequate alternative indicators of economic welfare to replace it. And I would even go so far as to say that GDP is probably a better indicator of well-being than the Human Development Index. I really don't think it's much. Apart from anything else, the items that they use, there's strong correlation between them all, meaning that it's in a sense double, if not triple, counting. Because one of the, so there's a weighting between GDP, life expectancy, and adult literacy. Now, there's a strong correlation between the three anyway. Countries with high GDP tend to have people that live longer and have higher adult literacy levels. So, in fact, one's reinforcing the other. So, in effect, it's not a particularly useful indicator.
And what about the that from Bhutan? We have that happiness. How different and how?
Well, that again, that's an interesting story. The World Happiness Index, big or gross national happiness. That in fact, that index didn't exist when I think it was the president of Bhutan, the king, was it the king? Sorry, the king of Bhutan was once asked a question, I think, by a journalist visiting Bhutan. Are you concerned that Bhutan's per capita GDP is very low? And he said, well, it doesn't really matter because Bhutan hadn't been capped, would, if it existed, would have a very high per capita gross happiness index. Then that started the idea, got people thinking about whether it would be useful to calculate it. It's still a very, very simple indicator that doesn't take into account anywhere near as much or as many benefit costs, items of the economic, social, environmental. Remember, the GPI is made of 25 items, about 20 to 25 items.
Full one page.
Yeah, so it is a master spreadsheet, and each item has its own spreadsheet. So, for example, the GPI that I will be calculating for each South Asian country, there will be 100 pages of spreadsheets just to calculate the GPI for each year. So it's very, very comprehensive. It encapsulates a lot of the economic, social and environmental benefits and costs that we're familiar with, whereas most indicators do not.
And then in gross domestic, in that happiness index, what they're included, because people talk about a lot.
Well, they don't include many of the social factors that are included in the GPI, or many of, I haven't looked at the index for some time. I think it's been revised, so a few additional items have been added, but what I do know is it's not nearly as comprehensive as the GPI.
Okay.
The GPI is the most comprehensive indicator of sustainable economic welfare, well-being, that has yet been devised.
Okay. So again, so we've spoken lots about good things about GPI. Now you tell me that what are the weaknesses?
Okay. Well, like any index, there's a weakness associated with the GPI. The major weakness, most people believe, is not so much with the concept of the GPI. It makes logical sense to have an indicator that counts benefits as a positive and costs as a negative, and then you get a much better indication of the well-being of the country. The greatest weakness with the GPI, of course, is the valuation or the value of the various items. In many cases, there will be some imprecision. That's largely due to the nature of the data. It's data, like any data of any aspect or aspects, it won't be entirely accurate.
Okay.
So there will be some imprecision as a result of the fact that the data won't be perfect, it won't be precise. But every indicator, including GDP, GDP is not an accurate, precise indicator either. So all indicators suffer to some extent.
Yep.
The thing is, with the GDP, if there is some error in the calculation of one of the items, that's carried through the entire study period. So the method used to calculate an individual item is not changed halfway through the study period. You don't use one particular method for an item for half the study period and a different one for the remainder of the study period.
The consistency is
consistency
is the most important thing, even in accounting like that. Yeah, basically, yeah. So basically, you're telling that the method is good, but the result can be different based on the quality of data.
Yeah. Well, now, my opinion is that there would be perhaps a 5 to 10% error factor. Which is quite small, because I think it wouldn't matter what indicator you're talking about, particularly any sort of economic indicator, you would expect a 5 to 10% error factor. It
is
is
statistical information. Any statistical margin of
the GPI will improve over time as the data improves. Okay. So improvement of the GPI is not so much the concept and the approach, but improvement in the data, which will, of course, allow better, more precise, more recognised and accepted valuation techniques to be adopted. So in some cases, you do end up using the second or third best valuation technique because of the nature of the data.
Okay, and so if anybody have any other questions, please text me and let me know. And so if once this information is there, is it possible to make some kind of software or something like that where you can plot and get it?
Well, it could. Well, as it is, the spreadsheets are all interlocked. They're interlinked, and equations in the cells, so that you can insert the data and various things will be automatically calculated. There are some things that have to be manually calculated, but there'll be an instruction manual. Okay, and it's not too difficult to do once you know how to do it.
Some of the examples which can be manual, which has to be manual.
For example, now when you're talking about household labour, sometimes you have to. So there are various things that will affect a number of household hours, labour hours. There are things such as consumer durables per household. So in general, a house that has more consumer durables, remember consumer durables are labour saving devices within the household. So the more consumer durables there are in the household, then the fewer labour hours that will need to be undertaken. However, so wealthy countries, that tends to reduce the number of labour hours, but in wealthy countries, there tend to be fewer people per household, which actually tends to increase, have the effect of increasing the number of household labour hours per household. So if you had everything held constant, and you had a country where the average number of people per household was 3, another one where it was 4, then you would have more unpaid household labour hours for the country with 3 persons per household compared to 4. And if you think about it, a person can do some work which will provide services for everyone in the household. If it's just 3 people in the household, that won't cover as many people as it will 4 people. And so to cover the same number of people, you'll need to do more labour hours, and so forth. Some of these have to be done manually.
So someone has to have
But most of it, you manually have to insert the values in a lot of cases anyway. That's just can be obtained straight from a World Bank Excel spreadsheets.
Yep. So
And of course, once it's all set up, if they're updated every 2 years, say, you only have to add an extra 2 columns to each item. It's not like you have to start from scratch. Right? You just have to add the new values, an extra a couple of columns, for each item, and of course you'd have an extra row for the master spreadsheet because it would go from 1970, well, in 2 or 3 years' time, down to say 2019. So it wouldn't once it's set up, it would not be too difficult to update.
Okay, so someone has to be a little bit of economics background.
It helps, but it's not essential. Because the instruction manual, in fact, there will be some people who have an economics background struggle with some of the items. So you don't need an economic. You will probably, when you're calculating things like infrastructural services, it's based on data on gross fixed capital formation. Those terms will be more familiar with someone with an economics background. But that doesn't mean, because in the instruction manual it say, the values for gross fixed capital, you just have to find that and just insert it. You don't really need to know. So it helps, but you don't need to know what that means.
You mentioned in the beginning that 25 countries, mostly
around about 20.
Mostly developed countries, maybe OECD countries,
Yeah.
They calculated for them. But
Yeah.
do they constantly measure, keeping that record? Any country who keeps a constant measure of them?
Well, certainly it hasn't been done by any national statistical agencies. So the data is only retained by a researcher.
So why there's so much apathy to embracing, even someone like good countries like Sweden or
well, I think it's a relatively new indicator. I think politicians play a large part in the sorts of indicators that are revealed, calculated, and given publicity to the general public, because one of the things about GDP is that it in general tends to rise over time, even whether it's beneficial or not. The GPI does not always rise, and tend to be averse to any indicator that might go down for a period of time. The last thing they want to do is enter an election campaign with an indicator that's going down rather than up. GDP, apart from the odd recession or what have you, GDP recession, you can almost guarantee GDP keeps rising, even though it might be making you worse off. But they're only interested in something that's rising, so they tend to focus on the GDP. A lot of politicians, a lot of bureaucrats would be unaware of the GPI. But I think over time, and would like to think that with projects like this one we're doing for South Asia, it will get greater exposure, greater publicity, and I think it will be embraced by the general public, and ultimately politicians will be forced to the
good part is that any political party who are in the power, they will not like it, but the opposition will like it. The opposition will like it probably.
Well, they might, except then they might not like it if they get into government.
Yes, exactly. When this switch, so when the politician, whichever party is they're in opposition, they will like this.
They'll like it if it's going down.
Yeah, going down. Once they are into power, they will not like it.
Well, it doesn't always go down, of course. And I'm expecting for South Asian countries, it should be rising. But I don't think it will be as high, and it won't be rising at the same rate as the capital GDP.
When it will be calculated, it will be one single year, or there will be all the indicators we can break down, giving the indicators, how the indicators are also growing.
Well, essentially what you do is you, on a diagram, is you have just the per capita GDP compared to per capita GPI. But as from the report on South Australia, it will give of how it's all broken up. There are individual figures that's further up for the individual items. So you get some idea of how the individual items are changing over time. And I think it's further up, it's up. But
so just a formula, that formula I want to look into it.
So here we go, that's the other word. So that's giving you individual items.
Okay, so in total we'll have one GDP versus GPI graph, but there will be subsets of all the subsets.
Items.
They will have their
it's necessary so you can identify the reasons as to why the GPI may be rising or falling, or not rising at the rate expected.
Exactly.
So which is what makes it a useful indicator to help design policies that can better improve the economic well-being, sustainable economic well-being of people within a particular country.
Maybe the local individual country, then why World Bank or IMF also don't keeping this sort of information?
Again, they're focusing more on the GDP and the standard national accounts. They are considering some adjustments, environmental adjustments. They're part of the United Nations system of national accounts, which is a national accounting system that all countries have to adopt. There are satellite accounts for environmental impacts, but they're not incorporated into the economic indicator.
That's why I'm coming to that, because World Bank do keep those information.
Yeah, they do. I'm getting data from the World Bank on environmental impacts.
Yes, exactly.
But they don't incorporate it into a broader economic indicator. Which is identifying, measuring, and comparing the benefits and costs of economic activity, which is what the GPI does.
So again, now you tell me also, World Bank also keeps some information. For example, for India only, I got some information on the. If you go to our website, then the Taj Mahal icon that's represent India, and if you go there, if you scroll down, in the top there is Human Development Index information is there, and at the bottom I gave some information. I got it from the World Bank itself on the freshwater withdrawal, then natural resource depletion. That means World Bank do keep this information that. GPI is a new thing, World do keep, but calling it
GPI is a new thing. That's just one factor.
Yeah,
it's not even given a dollar value. That's just one
percentage.
And I'm using that type of data to calculate the values for each of the items.
So again, another good thing. So when the GPI will be calculated, is it it's a dollar value?
Well, everything's for as far as environmental costs are concerned, so it's a cost, so it's got to be monetary value. Then you start off by determining the physical change, whether it's beneficial or detrimental or damage. And then once you've worked out if it is damage to the environment, you've got to work out. So it could be, if we're talking about wastewater pollution, it might be that there are so many gigalitres of wastewater pollution, then of course you assume a value for each litre of waste and you multiply that by...
How do they assume the...
Well, from various studies.
Okay.
So various studies that you can use to determine the likely cost of a litre of wastewater. At a 1 litre level, it's very small, but when you're talking about gigalitres, you multiply it by gigalitres,
so
it can be quite substantial.
Nothing new what Phil is telling in valuation, in accounting and finance also we do valuation, asset management valuations of roads and infrastructures and all that. And there we it's not marketable products, so there is no market, there is no fair value, so we assume that, so it is possible. For example, one of the big four accounting firm done a valuation for the Great Barrier Reef of Australia, so it is possible to do the valuation of natural resources. So only thing, some assumption has to be, just like in theory there is assumption, so there is assumption. Obviously it's not 100% perfect, but you'll get some idea.
Yeah. Well, so the idea, the notion of calculating environmental costs is not controversial. That's not the issue. If there is some issue, it's the accuracy of the calculations. The difference with the GPI is rather than a particular environmental cost being calculated on its own, independent of other things, the GPI counts all of these benefits and costs, brings them all together and establishes a single index of sustainable economic welfare,
which
is the advantage of the GPI over all other indicators.
Yeah, you're right. In World Bank, they don't give a monetary valuation of this information, they only give a percentage and trend line.
Yes, there is one. I think in air pollution, they've worked out some sort of emission cost, which I used. Okay. But apart from that, no, you have to to make some sort of assumption. But there are various people doing studies that give you some idea of what the per litre of wastewater cost is and so forth, or what the cost is of a loss of 1 hectare of forest or what have you, which you multiply by the total loss, area of lost forest to work out the total cost for something like deforestation.
Okay, and so what are the new research happening in the GPI? Who are the biggest, some of the, suppose now we talk about the GPI a little bit, people who are new to this field, which are the books they should learn? Even you also learned when you started, like Bibles.
Okay, well, when this indicator was first calculated, it wasn't called a genuine progress indicator. It was called an index of sustainable economic welfare. The name was changed because, the index of sustainable economic welfare sounds like something that academics talk about, but the name was changed to give it broader appeal. If we talk about the first indicator being that of the index of sustainable economic welfare, that was calculated as an appendix to a book by Herman Daly and John Cobb, which was called For the Common Good. That came out in 1989. So that's where it all started.
Anyone want to study in this field, they should.
They
should study those sort of.
The book itself talks about various things, and then they calculate some of those things that they talk about in the book in the appendix. It talks about and so forth. There are various reports, studies, GPI reports and studies that have been done over the years, as I said, about 20 to 25 countries, explain the rationale for a GPI and talk about how the GPI is calculated. This one here, this particular book here, was a book that, now this is going to be in reverse.
I don't know.
Yes. Okay. No, that's not going to help.
Okay. I'll still try to show people.
This is a book that was done for a particular state in Australia.
Photo and then rotate it.
Anyway, what about that one? Does it do it back to front, that one? Yeah, it does too. Oh. Have you got the phone? Anyway, this one was I was commissioned, myself and another person, Matthew Clark, by the Victorian government, Victoria being the state of Australia, to do the GPI for Victoria. And to do the GPI for Victoria. We did a report and then we published it as a book. Now this talks about, in this particular book, now this book came out in about 2006, so it's not a recent book, but it talks about, if I just try and refresh my memory here, it talks about the problems with GDP. It talks about the GPI, how it's calculated. Then we reveal the results, the study, and we talk about its policy implications of the GPI results. We talk a bit about the weaknesses of the GPI. Then there's various summary and various conclusions. And then at the back, we talk about how we calculated each item, and the spreadsheets are also published in the back of the book, so it gives you some idea of what's been done. This is a more recent book. This is the economics of climate change.
It's packed. It's not open.
Yeah, it's not. It's just. But in there, I have included one of my GPI studies as a means of demonstrating some of the benefits and costs of mitigating against climate. Now, this is not a cheap book, but you can download, you can go to Springer. Springer is the publisher. You can download individual chapters, which is a lot cheaper. But if you're an academic and you want a good book that includes the GPI in your university library, this is the book.
How much is the cost?
Oh, look, I think it's about as much as $200, $250.
And chapter-wise?
Sorry?
Chapter-wise?
I'm not entirely sure. Yeah. It is cheaper that way.
So is it in Kindle and all that?
I'm not sure if it's in an e-copy form.
E-copy, that's it.
Yeah. So you get the hard copy and the e-copy. Yeah. In fact, if you buy it by the individual chapter, you will be buying an e-copy. But you can buy the entire book as an e-copy, or you can buy it as a hard copy.
Hard copy. And you don't need a pillow for that. So you can buy one book and you can use it for a pillow.
Or not a pillow. A hammer.
Oh, yeah, it will be very hard to do.
Yes.
Yeah. So other than so you are one of the researchers who doing, and who are the other international researchers who are doing similar research in this field?
What with the GPI? There are a few organisations there at the University of Vermont. So the GPI has been calculated for a number of states in the USA.
Yeah.
So the University of Vermont, someone's been working on the GPI. The state legislature of Vermont have included it as one of its indicators.
Okay.
So I'm talking about how politicians don't like it. This is one unusual example where they've actually incorporated it as part of the decision-making process. So it's informing many of the policies that are being implemented by the
Can you
Vermont.
name some of the researchers?
Joshua Farley.
Okay.
Farley, he's worked with Herman Daly and so forth.
Yeah.
There's various people. I would, if you bought this book, some of the references in the book would be talking about. But without boasting, I would have to say I'm usually a very modest person, but if I cast my modesty aside, I'm probably one of the world leaders in this. I've done more GPI calculations than anyone on earth. There's no doubt about that.
Yeah.
Yeah. So I've done it for Australia. I've done it. I've helped some people do it for China. Some people for New Zealand. Also Thailand, Vietnam. I've done it for South Australia, the state of South Australia, state of Victoria, state of Queensland. So I've done, I've done numerous. I've updated them on numerous occasions.
Information from South Asian economists that's working on that?
I'm sort of working on it now.
Yes, definitely. Yeah. But is there any special conference and all that for ecological economics and all that?
Well, there's one coming up. It's in Mexico, but it's only in a couple of months' time.
Yeah.
The International Society for Ecological Economics.
That is an international conference?
There is an Indian Society for Ecological Economics, and they hold their conference every 2 years. So the International Society holds its conference every 2 years on even numbered years, and the regional chapters, so like the Australian New Zealand Society, the Indian Society, the US Society, there's a Canadian Society, there's a European Society, hold their conferences every 2 years on the odd numbered years.
Okay.
And quite often in the conferences there might be a session on the GPI.
Any South Asian countries you can remember?
No, because there's basically been no work done on.
Okay.
Now there was one of the International Society for Ecological Economics conferences was held in Delhi in 2006, so it has been held in India, and I may have presented some.
So, from that region, who are the well-known ecological economists you can remember?
Oh, I can't remember. Amartya Sen was, of course, he's not strictly an ecological, but he addressed the conference in 2006. Yeah. So I would like to think that this would help promote and develop the sub-discipline of ecological economics throughout the South Asia community region.
So, any other questions do you think you want to add or something like that?
I think we've added pretty much.
Covered.
I don't know if you've got any questions there from.
No, we haven't got any questions. Okay, let's not just 1 second before. We'll just try to find out. Search. And my email also, let me check. No, as such, there's no any questions anymore. So thanks for Professor. Just 1 second. Thank you.
All right, thank you very much. All right.
product of
Thank
South
you.
Australia. We
It
are
is.
supporting, so that's
Yes.
South Australia.
All right, but alcohol consumption is not counted as a benefit in the GPI.
But give some employment,
Yeah, but okay, so it might give unemployment down.
some
But,
entertainment. Yeah.
But there are resources that go, and there might be some soil erosion and excessive water use
Yes.
to irrigate the crop.
Yeah.
Yeah. But thank you.
Yeah. And so there is one more final session on 28th. It will be around 3:45 p.m. Adelaide Australian time. And generally we have a 4 hours difference between Adelaide and India. And accordingly, South Asia maybe Dhaka will be half an hour before, Pakistan will be a little bit half an hour or something like that. And then Bhutan will be 15 minutes here and there, or Nepal will be like that. So it will be in that area of time. In summer we have 5 hours difference. So 3:45 accordingly in India and South Asia on 28th July, Saturday. So we'll be giving that final thing, presentation. Then we'll do our work and we'll definitely come to South Asia to publish. And if anybody want to help present the result, and anybody want to help us in any way, financially and non-financially, in time, and where we can publish, and which platform, which universities want to host us when we'll be going there, that'll be great. So, and keep emailing us and texting us, and keep like and subscribe our YouTube channel and and Facebook channel. We're just starting newly. We are not very technology savvy. We're trying our best to learn as we go. So thanks for cooperating and understanding and participating in our things. Thanks a lot.
Thank you.
Yeah.
All right. Well, I think that went okay. Did it come through all right?
Just a second.